Copper versus gold. What is it telling us? We're going to take a look at that ratio today. We'll also do live gold, silver, platinum analysis as well, Bitcoin and crypto, and all the usual fun stuff. If you're watching this on the replay, look, dudes, use the time codes below to go to your favorite part. But man, if you're watching this live, geez, do you get to enjoy every single thing we do here at Good Morning Stackers? Ooh, extra singy one with me, Joe Main. But in the first 1 minute of the show, what we do is the synchronized slurp. That's where you grab a tasty beverage, I grab my tasty beverage, and we slurp them synchronously together wherever you are in the world. We're going out live on X and on YouTube right now. Yes, my wonderful commenters, it is Hat Day. I'll explain that a little bit later. Does it really matter? No. What really matters is doing the synchronized slurp, and what really matters is doing it audibly. You must slurp your beverage, whatever it is. I don't care if it's hot or cold, alcoholic, preferably not, or just plain old non-fluoridated water. Let's get into it, people. Ready? 3, 2, 1, slurp it. Oh, good stuff, people. My name is Joe Main. Australian dude, born and bred here in Melbourne in Australia. I've been a stacker of precious metals since 2010, a stacker of crypto since 2013, and I worked for 3 major gold and silver bullion dealers here in Australia for 11 years. Now I do this daily live show, and I help you launch and grow on social media as well. Specifically, I've had a long history of building businesses' YouTube channels. You've seen me do it for Bullion Now. I was their first employee, launched and grew their YouTube channel to where it is today, or a little bit less than where it is today, because I left a couple of years ago, but nearly 20,000 subscribers by the time I left. All those epic unboxing videos, the videos you've seen that have had nearly 1 million views on YouTube as well. Me, baby. And I revitalized Ainslie Bullion's channel as well, and I've served thousands of customers in my time as well, giving you non-financial advice about the best ways to invest in gold and silver and platinum and copper even as well. We'll take a look at that today. Do some quick shout outs, and then we'll get to said topics. Where is everyone today? What is going on today? It is Thursday, May the 15th, 2025. Did no one get the notifications? We've got some commenters here. Hat Day says, Lance, it is a hat day. Just stuff couldn't be, yeah. Anyway, that's the reason. Buenos dias. That's the Buenos dias is the Buenos dias is the Spanish, right? Tell me it is, unless I'm wrong. Hey, says Posh Sloth. Good to see you, my friend. Penguin blue waving tear. Cool. Sometimes I don't get those specific emoticons. Gerald Draper, good to see you, my friend. You are drinking beer, my friend? Okay, fair enough. Hey, guess what? The show is brought to you by Perth Bullion Exchange, perthbullion.com.au, and Mastering the Markets.com. Jason Ashworth says, morning, stackers. Morning, Jason. Good to see you. On that, Jason, very quickly, because Jason lives in Newcastle, in New South Wales in Australia, and I'm in Newcastle on Friday night performing as, if you don't know, I'm a Bono in a U2 tribute band. Yes, I've been a singer and entertainer for 25 years. Bono in a U2 tribute band. We're playing at Flamingos Live. It's called Flamingos. It's in Newcastle. And Jason's from there. I'm trying to hook Jason up with a couple of free tickets. Haven't heard back from the event manager just yet. I don't see why it should be an issue, but I'll let you know, Jason, via email. Posh Sloth, happy to be here. It's been a while. It has been a while, Posh Sloth. Luke Kabasi, good to see you, my friend, back on the show. Should I buy some gold or silver? Short answer, silver. If between the two, silver. Silver. Now, if you're asking if between gold, silver, or platinum, probably platinum. If you're asking between gold, silver, platinum, or copper, well, let's take a look at the copper to gold ratio. Today, hello everyone, hit the like button, yes please, it helps me with the algorithm. Good morning, says Silent Stacker. Chat Mum is not here, Tony Peterson, but that's okay. Everyone just don't get up to too much mischief while Chat Mum is not here. Yeah, let's get into it. Copper versus gold. What is it telling us right now? It's at almost or it's almost back to historical lows. Okay, we had the big low in March of 2020. We know what was going on over there, and we're back down in that area. Could it be forming a bottom right now? It's not confirmed either way, but it means two big things either way. So that's why it's very important to, I think, watch that ratio in particular for general economic stuff. And we're just going to take a look at the chart and see where we are. Now, what am I talking about? Okay, obviously it's the copper to gold ratio. So you take the price of copper, you divide it by the price of gold, and then you get this ratio number. Let me share the screen for you so you can see what I'm talking about. This is the copper to gold ratio. This is on the monthly time frame. It's priced in, well, it's not, it's a ratio, so I'm going to say price in USD. Using the tradingview.com website. I'll get rid of a couple of things. I'll get rid of the fib. No, I'll keep you, I'll get rid of you, and I'll get rid of you just for the moment. Cool. The copper to gold ratio. This only goes back to 1998. But it does go through the historic low that it's ever been, which is, again, March of 2020. We know what was going on there. We'll come back to the chart in a second. Why am I talking about the copper to gold ratio? Well, it's actually based on me scanning the news this morning, and I saw an article. Now, I'll call it an article on Zero Hedge. Okay, this is good old Zero Hedge. And it's actually, look, it's sponsored content. It's from JM Bullion. So bear in mind, they've got, some financial reasons to talk about gold and copper and whatever. So it's a bit of sponsored content on Zero Hedge, but let's take a look. Here's what they say. The copper to gold ratio, the market's most overlooked warning signal? Question mark. Now, I would agree with that. We just don't know where the price is going exactly just yet. But let's have a quick read. And then we'll come back to the chart and talk about, we'll punch into the smaller timeframes as well. Gold's been stealing the spotlight, yes, but another signal is flashing behind the scenes, the copper to gold ratio. Yes, historically, this ratio has been a powerful gauge of where the economy is heading and where metals might go next. So I would agree with that. Right now, that warning light is flashing red. Okay, now bear in mind, read everything with this in the filter of this is a sponsored content, okay, obviously. So they're going to have a bias to say one particular way it's heading down. Could be heading that way, but we'll take a look at the chart in a sec. What the copper gold ratio means. When copper outperforms gold, so when we go back here, when number go up, cool, it usually signals economic optimism, okay? Copper is tied to growth, construction, manufacturing, and technology. When it's strong, it suggests expansion. So it's risk on. Okay, people are willing to take more risks. Risk on assets. The S&P 500 stocks, tech stocks, and the Nasdaq, etc., tend to go better, if that makes sense, versus precious metals. When gold outperforms copper, when number go down, markets are bracing for trouble. Investors start seeking safety instead of betting on growth. It's an early warning sign that something bigger might be brewing. Well, you can certainly see right here down in 2020, something bigger might be brewing. And then we had that big move underneath that major level there. And then we bottomed at that March of 2020 thing. And then shot straight back up, actually. As did everything else. Let's go back. Not quite copper bottomed. I didn't even see this. Not quite copper bottomed recession signal. The gold copper ratio is lower. The gold copper ratio's low is concerning, but doesn't guarantee recession. So I do agree with that. So we're in agreement. Right now, gold is dominating copper. Yes, as of April 22nd this year, the copper to gold ratio plummeted to its lowest level in nearly 40 years, signaling recessionary conditions not seen since major market downturns in the mid-80s. Even with copper's recent price action, let me show you, even with copper's recent price action, let's go there. Should have had that a little bit closer to each other. That would have been preferable. So even with copper's recent price action, so it is at near all-time highs, okay, in US dollar terms, okay, but let me go, if I do that and then I go back, good, it takes me back, that's good. it hasn't been able to keep the pace with gold's surge. So you're seeing that ratio go down. Got it? Why this matters for metals investors. Here's where it might become a little bit, bullish for gold. I guess, what do? They sell gold. If history holds, yes, a falling copper to gold ratio doesn't just warn about the economy. It often marks the start of powerful moves in precious metals. Well, I do think powerful moves in precious metals are going to continue. We've seen gold. It's going to have a bit of a dip. It'll continue to go. So that could mean the gold to silver ratio, the gold to copper to gold ratio is going to continue down. Could absolutely be. But I'm going to show you the contrarian view in just a second. During previous periods of weakness in the ratio, gold and silver exploded higher. I expect silver to go higher as investors scrambled for hard assets when paper promises looked shaky. Today's setup is eerily similar. We have tariffs fueling inflation. Tariffs, will they remain? Will they not remain? Don't know. It's the carrot and stick. Slowing global trade, a wobbling dollar, and bond markets. Well, the bond markets, have you seen the yields? Flashing stress signals. It's no surprise that gold has broken out and silver could be close behind. Yes, it could. Now's the time to get real. Click call to action. Markets are full of noise, but the copper to gold ratio cuts through it. It's signaling caution. I would agree. It's telling investors that growth bets are getting riskier, maybe, and real assets like gold are becoming more essential. Yep, owning physical gold is about positioning yourself before the storm hits full force. Could not agree more. You buy physical gold as a hedge against bad stuff. As I've said for 10 plus years, think of gold in particular, silver as well, but gold in particular, it's just another form of insurance. So, do you have gold even though you think the world is going wonderfully? Yes, you still have gold, okay? Because, do you have life insurance even though you're a perfectly healthy person? Yes, you do, because just in case, right? So gold is insurance. You should own some physical gold no matter what, or silver, no matter what the economy is doing. Cool? And that be the end of that. Oh, and gee, a little bit of a plug for JM Bullion right there. No worries. I just want to see when this was actually written. It's a sponsored content. It seems to be in the last couple of weeks at least. So it may have been on the Zero Hedge website for a little bit, or it may have been there, maybe a couple of weeks. Okay, so let's take a look at go back to the copper to gold ratio. We'll pop in here and have a look at the macro view. Now, the copper to gold ratio has not closed this month yet. We're in the middle of the month, but here's what's potential. Now, all of this is potential, okay? What we can see, obviously, at a very low point, we have not matched yet or broken through the COVID low, okay, right there. You can see, though, however, we have broken through this general range right here, which is preferable that you didn't do, okay? This goes back to, again, Mark, this goes back to 2008, okay? What would, if the following had have happened, and this is hindsight, right? If the following had have occurred and we had have found support more so here and not broken through here, you really could have said over the longer term, okay, this is support here. This is what is called a liquidity grab as such with a ratio, okay, where it comes down, fakes people out, and then if this had have remained a support, then I would have been like, okay, that's the liquidity grab. That's another low right there, matches this one, and you would have formed, okay, and you're actually still forming. But I'll show you. I'm giving you the what if scenario. If you had have found support there, this is what would have played out, okay. You would have a higher low on the monthly. Now, bear in mind, the pivot isn't in yet. We haven't closed the month, okay? But I'm telling you all this for a specific reason, okay? But look down below here. You've got a flattening out, or even it's a very slight decline, okay, on the relative strength index, and you have a lower low on the on-balance volume. That's setting up a potential hidden bullish divergence, okay? Higher low, flattening out, it's definitely diverged the price, okay? Lower low. And that's a potential hidden bullish divergence, okay? And I would say particularly if we had have held here, that would have been really good. And then breaking up back above here would have been a really good sign. Now, that's not what we did. We did break lower through this range right here. However, we haven't made a lower low, okay? So let me show you where we are right now. Again, the month has not closed. So there's still a potential hidden bullish divergence playing out. Let's pop into the weekly and see what we see there. Come on, Chestnut. Okay, right there. Here's the weekly, and it's basically a similar thing. Now, that's that one. Let me get rid of this right here, and then we'll show you. That's the one. Okay, I'll get rid of you, and I'll get rid of you. I'll keep them, bear that in mind there. I'll get rid of that one. And no, I want you, and I want you. Now let me show you the weekly. I don't know where that trend line went. Is it there? No, it's not. It is right here. So here's a weekly. Now I'm seeing this. I could be wrong on this, right? So here's on the weekly time frame. That's the biggest, I guess, weekly kind of pivot. You can even say, if you want to, on the weekly, you could take it even back to here. Okay, so what you could do on the macro, you could say that's a big dip. And then what have you got here? You've got a flattening out once again. And you also have on the on-balance volume. Nope, that's the monthly. You also have right here I hate this thing that gets in my way. Does everyone else get annoyed by this? I do. That's also, you would call a flattening out or a slight incline. Okay, so this is a regular bullish divergence. So not hidden bullish, regular bullish, right? Lower low and a higher low on the oscillators. Okay, right there. You could even say, if you wanted to, you could even call it here. If you really wanted to. Again, not 100% confirmed. Maybe is the pivot in? That's a good question. But you could even say from there and there, right? That's a bullish divergence too. And you could say that's kind of flattening out or actually raised. So that's a bullish divergence on the weekly time frame as well, on a macro weekly and a bit of a micro weekly, if you want to call it that. So now we need to pop into the daily time frame and see where we are. And I'll get rid of all this other stuff and flotsam and jetsam. Cool. And what I think it's very interesting, nothing's confirmed yet, but we're getting close. Cool, to a potential reversal in the copper to gold ratio. And here's my little setup right here. So this is on the daily. And you can see pretty clearly, and what you do is you grab the trend line and you don't take it from the spikes, apparently, so I'm told. You take it from the closes. So we've got close here. What is that? That is a lower low. And then on the relative strength index and on the OBV, you've got higher lows forming. Cool, cool. So all this is setting up potentially for a reversal on the copper to gold ratio. Now, what would that signal? It signals here, they say here, and I do agree, as this is going down, and now we're not out of the woods just yet, okay, and I have to show you that. But as this is going down, and as it goes down further, it more so says we're continuing risk-off scenarios. Okay, so people are a bit more fearful about the growth of the economy. But as this goes up, people are more positive about the economy, and you're seeing more risk on. So again, stocks and Bitcoin, crypto, anything risk-on assets would be more in favor. We're really close to a breakout. We're not there yet. We've got a couple of hurdles. Okay, so I just want to keep this in mind. Nothing's set in stone yet. Could we reject here and continue on the merry way down? Yes, absolutely. But I would suggest there's a really good chance that we might be forming a bottom here. Why? I just showed you the monthly time frame. Potential, not confirmed yet, hidden bullish divergence. Weekly time frame looks like regular bullish divergence, and on the daily, forming what looks like to be some kind of bullish divergence, at least on the daily. Here's the hurdles that we need to look out for. Okay, and this is important for you guys to note. So I would call it here, would be, others might be different. I would say your bullish change of market structure is if we start closing above here. And that's looking good. That's a turnaround, okay, in the price. I would say, though, you're not out of the woods until you get at least probably above here, okay? So you've got what is, I wouldn't call it trapped money as such because it's a ratio number and not a fiat dollar price. But you've got a bunch of buying here, okay? A bunch of, I guess, where people swapped copper for gold here, something like swapped copper for gold? No, swapped gold for copper here. Okay, copper was going, oh yeah, we're looking good. Oh, looking good here, looking good here, looking good here. And then it sailed through. It was looking good, and then it did not break that resistance. Oftentimes from a failed move, it's a fast move in the opposite direction, okay? So you'd be butting up against these people here. Call it just the general market psychology, where these people started buying copper here, 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 and here. And now that's down here. Some of those people here, institutions, individuals, I don't know, would be deciding, oh, yeah, I don't know, this could be massive resistance here. So I'm going to get out and play it safe and see what happens next. So generally, they're probably going to go, I'm going to wait to see if it does this. And then if it does that, then I'm in. Now, that's probably where I'm sitting at the same time. Okay, so I would imagine you're going to get some kind of resistance here. What it does from here is the big kicker. So this is crossing here is good, but it's necessary but not sufficient. What you would then want to do is find a higher low and then break through here, and then you're looking not bad. The last hurdle I would say, if you want to be really, really sure, is you would probably want to say through here is really good, okay? So you could probably take a risk if you wanted to and, get into copper. Again, this is copper versus gold. If you want to potentially up your gold ounces because you love gold and that's it in a bit, right? When you see ratios like the platinum to gold ratio, which is historically low and has just recently broken out of its market structure, it's looking good. You want to look at the other precious metals and go, geez, I could really up my gold ounces by holding other precious metals, silver, platinum, potentially copper here, okay? And it also signals, and I'll go back to what that signals. I'll show you some other charts in a second. So short answer is potential. You've got those macro, the monthly and the weekly showing some bullish signs. This last little thing needs to get going, okay? Cross over there or find resistance here, find support around about here. For example, if you found resistance here, you would take it from this low and this high, and you would want to bounce, basically where I put it, bounce no lower than there, and then onwards and upwards we go. I would probably personally be happy to either take a position into copper versus gold, like buying physical copper or a copper ETF, something like that. Or, I would consider really getting into some copper here versus gold. Again, copper in its fiat dollar price could be going down, but, gold could be going down further, or both could be going up, but copper's going up higher at a quicker pace, if that makes sense. Cool. So I'd be happy to get into some copper here. Here's what I'd also be happy to do. I think this would probably be a good signal that we're going more for a risk-on environment in the upcoming year or so, something like that. It's more risk-on. Okay, now what else is saying that we might be more risk-on at the moment? What's giving credence to this happening rather than a breakdown here? Let me show you the S&P 500 and the NASDAQ right now. If I take it, talk amongst yourselves, funky people. Here is the NASDAQ, and are we out of the woods? Geez, it looks like we might possibly be. We might be even breaking resistance right here very, very soon. Okay, so this is the NASDAQ on the weekly time frame. You can pretty easily see there's a big level of resistance right there. Looks like we just actually broke it on the weekly time frame, roughly. Yeah, we're poking our head, and we're coming up to this downtrend line as well. Let me show you here. This is on the relative strength index, and on the, there we go. Yeah, that's looking pretty good. So we're nearly there. We're nearly out of the woods. On the fiat dollar price, though, we have broken back through resistance. We're out of the zag zone. So we're above the 0.618. So we're out of this zone right here. That was really positive when we did that. I did say, look, preferably let's get above the 0.786. We're currently just picking our head above there. Could this be now the time, if we don't have a quick reversal, back down and through here. Could this be the time where we are going more risk on? The S&P 500 is looking bullish at the moment. Okay, let's show you the NASDAQ. What was that? Don't know why I went to SLV, but no idea why I did that. The NDX, okay, similar thing. That's actually looking even more so bullish than the stock market, okay, than the S&P 500. It's actually picking its head a little bit further above. So you can see very clearly we got back through that area. That's a bullish sign. And that's basically, I'm pretty much saying to you now, I'm pretty confident that we're going to make a new all-time high in the NASDAQ, unless a black swan event happens, something like that. So it is seeming like risk on is already happening. And the copper to gold ratio, I think that would be possibly the final little nail in the coffin, okay? So this is it on the weekly time frame. Yeah, just do that, either break through there or do something like that. And then I think it's game on for risk on assets. Again, so I've shown you the monthly and the weekly looking bullish, okay? Wait until the close of this month probably. If you start doing this, that's looking very good. So it could be risk on. So while I do agree that it is a very overlooked warning signal, while there are signs that we might still be heading down in the copper to gold ratio, signaling precious metals going to have a big move, I actually don't think it matters too much. I actually think there will come a time where we might be risk on, but gold and silver still might be going up at the same time, just not as quickly, okay? There might be an everything up thing, almost everything up thing coming soon. But yeah, I think there's a good potential for a change and we go to risk on. So consider getting into copper if you see that, or consider just going sort of more risk on assets. Cool. That is the copper to gold ratio. It's what it's telling me at the moment. There's a really good potential for copper to be a great play versus gold, and for risk on assets to be the flavor of the, call it months, 6 months, year, who knows, right? But we just have to keep on top of it. That's the copper to gold ratio. If you want to buy precious metals, go to Perth Bullion Exchange, perthbullion.com.au, the greatest bullion dealer in all of Australia. You know that. 20 or more items in your shopping cart and you get free shipping. There's no bullion dealer in Australia that gives you free shipping. Did you hear that correctly? Yes. Since bullion dealers have operated in Australia, pick the decade, pick the century, no bullion dealer has offered free shipping when you buy over any amount, okay? And I thought that was weird when I worked in the precious metals industry for 11 years at various bullion dealers, right? I was always like, why didn't they give free shipping? And then I had a great chat with Ricky from Perth Bullion Exchange. He was about to launch his business. This was in May of last year. We had a good chat because he wanted me to help him with his social media, which, you know, as I'm actually helping Perth Bullion Exchange, I'm teaching them the skills of how to create consistently engaging content. So you've seen their YouTube channel and the views they're getting at the moment. It's great. For a small channel, they're doing great views, right? I'm helping them do that. I can help your business. That was an intra plug. But we had a chat. It's like, I'm launching this bullion business. And I went, oh, really? Another bullion business? Okay, I've seen them all. I started my own. Okay. And I was a little bit skeptical, right? I went in with a skeptical eye in a positive way. And I said, okay, are you going to offer free storage? Yep. Oh, okay, cool. Tick. Are you going to offer an unallocated program? Yep. Oh, okay, that's a tick like the other big boys do. Are you going to do X, Y, Z? Yep. And then I asked the question. It was so funny. I said, I don't know if you've ever thought of this, right? And he had a little smile on his face. He knew what I was going to say. And I said, no bullion business has ever done free shipping. Have you ever considered that? Because you would be the first. And he goes, that's part of the plan. And I went, hallelujah, right? It was like a beautiful marriaging of worlds. Okay, so this is why they are my preferred bullion dealer. They're doing everything right, including free shipping when you get over 20, when you have 20 or more items in your shopping cart. They even price match. If you can find a better deal on something that Perth Bullion Exchange has on in stock and the other dealer has in stock, one of the majors, right? Not just your mum and pop Facebook group special or whatever, right? Some T's and C's, but they'll even price match as well. There's no other bullion dealer that has price matching as official business policy. Come on, man. Perth Bullion Exchange, perthbullion.com.au. AU. Let's do some comments on this copper to gold ratio thing. Then we'll take a look at the regular markets that we do. We'll take a look at silver, etc., platinum. We'll do some Bitcoin and crypto. And I might take a chart request if I have time. Let's see. That's where we got to. That is great. GMS, y'all. Good to see you, my friend. Jason Rosana. Hey, bro. I didn't turn the heater off. I'm about to get absolutely roasted in here. Posh Sloth says, or something with a cowboy hat. Lance, yeah, with 10 and 30. Yes. Yeah, this is the thing. This is the thing, though. Yes, this is why I said it's potential. With the 10-year and 30-year climbing, the yields, the VIX all over the place, I can't see expansion coming. Yes, look, the yields are going through the roof. That's not typically a great sign, okay? They're heading back up to that sort of 5%, particularly on the 10-year or the 30-year yield. So, yeah, we could still be, and again, it's not confirmed, the copper to gold ratio could still just be going down from here. It could go lower than the COVID low, okay? That's not a good sign, okay? Now, that's good for you and me with precious metals. Cool. But, yeah, that would not be growth, okay? Just waiting for that. There's a potential turnaround happening. I think we're just on a real big precipice here, and we don't know. We could get faked out bigly here, okay? Pete Repeat, GMS, hi, everyone. Maximus is here. Good to see you, my friend. Maximus is a member of the Mastering the Markets Academy. Lance, I wonder if Risk On is setting up for the most epic all-time collapse. Now, yes, you could be correct. We could be just in a little bit of a, like the NASDAQ and the S&P 500, they'll show you, it's just creeping above those levels. Could we get to the all-time high and then just go double top? Yes, absolutely could. Totally. 30 to 50% down, in my opinion. Yep. 16 people in the room and only 7 likes. Get on it, people. Yes, give me more likes, people. It's just setting up people who think, yes, correct, NASDAQ and SPX only go up. Yes, this could be an epic fake out right here. Totally. Good evening, y'all. Joe's schooling us. I'm trying to give a balanced view of what potentially could happen. Do I have my own opinion on what could happen? No. I'm going to be open to the data. So if the data suggests that if it changes and the copper to gold ratio starts really climbing, that's going to suggest it's a risk-on environment. Again, we've got to get over those levels that I talked about. On balance of probability, I'm probably more bearish on the economy. I like the fact that we've got someone who I believe is in the current US office at the moment, admin, that could do something better, but for the economy is probably one of the only people with his team of people to actually pull us out of some kind of a massive recessionary thing. But is it just maybe more of a soft landing than anything else? Can it really be helped? Are the cycles going to do what the cycles are going to do, regardless of who's in power? Probably. But just got to watch out. Translates to, fair enough. Okay, let's take a look at the other stuff we're going to do. And I'll quickly share the screen and come back to it. We'll take a quick look at gold and silver just very quickly, and platinum, and then we'll go to Bitcoin, crypto, and all that yas. Okay, here is. All right. Let me get rid of unbalanced volume. I don't need you right now. Even though I like you, I don't need you. Here is gold on the daily time frame, priced in USD, $3,180 heading down as expected. And that is what it is. And we're still heading down as far as I'm concerned. I've got some Fibonacci drawn in here, but maybe this isn't the right one. I think I was just kind of mucking around before. Give me a sec. So I'll get rid of you there. So I think at the moment you've got this one, which is still potentially, we're actually below it at the moment. Oh no, we're right there. Yeah, okay. So very crucial, if we do not hold right here, we're right at the 0.618. We're in the zag zone right here. And that's at 3,160 something. We're right there. It needs to turn around quick smart. Okay, but there's nothing telling me from a technical analysis perspective that we are going to bounce here. So quite likely more likely than not that we head down a little bit further. Now, here are all your trend lines that you need to watch out for. We could bounce at any of these. The first trend line is this recent mini uptrend, and that's from January of this year. So it could just go through there, and yeah. So watch out for the bounce at potentially around about 3,130 US dollars. That's your first one. Could it get down to there? Sure. On the daily time frame, the relative strength index, we're getting below the halfway point. And in an uptrend, in a big uptrend, you don't spend a lot of time in this bottom half area, as you can see. Look at this, right? In the uptrend, look at, right? You spend basically zero time in that area. Okay, here's roughly your halfway. Look at the difference between the time spent halfway below and halfway above. It's basically above. Okay, so don't expect it to head down into here first before you start ticking up again. Now, it might, but don't expect it. Okay, so I would potentially expect, I'm expecting some kind of support here. Whether it holds, I don't know. So watch out for support at 3,130. Then if you don't break up quickly through there, I did this yesterday, then you're probably going to do something like that, and you're probably coming down to the next one. And that's at around about 2,980 US dollars. Similar thing, if you break through there and you hold that as resistance, then you're probably coming down to the next one, and that's at around about 27 to 2,800. That I give probably a 40% chance at the moment. It's more likely here or here, but don't forget we've been in a really large move. No, I'd kind of give that 50-50. This is butting up against the mother of all trend lines right there as well, as you know. So we can come anywhere down to there, and that's actually quite par for course, as you know. Why? Because the mother of all trend lines is the one that goes back to 1980. If you're new to the channel, welcome to all the new subscribers. 1,616 YouTube subscribers, 3,600 X followers. 1980, 2011, the Moatl, mother of all trend lines. You break out, you have a retest. Really normal. Break out of a major trend line, retest it, bounce off it, cross there. That's really, really good for gold. Bear in mind, we're in extremely overvalued already on the monthly time frame, okay? But yeah, so I would say actually it's 50-50 at this stage. It's even Stevens that we come down and test around that $2,700 to $2,800 level. But hey, if we break up back above here, good going. Those are the levels you need to watch out for gold. Here is silver, $32.15 US cents. It has failed to hold. Okay, so probably expecting a bit more of a move down. And watch out for, we did respect the 38.2, didn't we? Yes, we respected the zag zone, the top end of the zag zone. So just watch it here, and anywhere down into here, you don't want it to cross that. I've had it there before, that $30.40, $30.50 US dollar area. Do that, please, and thank you, and then cross that $35 barrier, and then onwards and upwards we go. Break below there. I know it's very liney, but then find resistance and then very likely heading down further. And watch out for the all the way down to max pain, which is around about 24. Not saying it's going there. 10-20% chance at this stage. But yeah, at least hold that $30.50, and we're looking good. Okay. That is silver, and platinum is at $983 US dollars. It's still in a trading range. Needs to break that $1,000 mark, and then needs to break the $1,100 mark, and then we're good to go. Otherwise, we're just trading in a range, and your bottom end of your range is at around about $880, $900 there-ish, between there and there. You're good. It's an accumulation. I am positive on silver in the longer term. Cool. Gold to silver ratio. Not a lot to say. Yeah, still hovering around 100. That's all I have to say about that. I'm not going to do the accent. Let's take a look at Buttcoin. Bitstamp exchange. Yeah, that's the one I want. All right. So if the copper to gold ratio is going to continue, if it's going to break out and then signal, oh wow, it's actually quite bullish, that will be quite good for risk on assets as we're talking about. And Bitcoin would be one of them. Let me get rid of some stuff here. Pardon me. Here is Bitcoin on the daily time frame, price in USD, 103,670 US dollars. So far holding, and not a lot to say. Same as yesterday. Yeah, that's all I've got to say. It bounced off the 0.382. Good. It just needs to hold that $98,200 area. That's it. That's it. So I don't know. We could do this. Great. We could do that. We could do that. Sure. Just don't break 98,200. Then you're getting a test of here, and then you got to watch out for that. That's all I have to say. And please bear in mind, if we crack above 105, that doesn't mean we're going to make new all-time highs. And even if we do make all new all-time highs, that doesn't mean it stays there for long. You can easily get faked out. Just like, Lance was saying in the comments just before, this could be, or I think one of the others were as well, this could be an epic fake out here. Yes, it could, okay? Just because we're above the 0.786 from this high and this low doesn't necessarily mean, it's good to see, it's great to see us above right here, and we found support around about there too. Interesting how that lines up with Fibonacci. That's good, but you just got to watch out for it, okay? Is that that wouldn't be the Elliott. I'm not an Elliott wave guy, so I'm not going to do Elliott wave stuff. But look, I will say, where are we? Lower low, higher low. That's good. That's bullish divergence. It has been playing out. Triple tops usually aren't a thing, but you can even come up to here. You've really got to watch out here for the liquidity grab. Is this going to get a whole bunch of shorters? Okay, maybe people who shorted here, right? They're going, I've shorted here. This is definitely, and they should have shorted here, because what they saw was a flattening out of the price, but a lowering of the relative strength index. That's a bearish divergence. They went, cool, I'm going to short right there. Nice. Haha, I'm so cool. But of course, I've got to hedge my bets. I have to put a stop loss in, because if this thing runs, I start losing money. So I'm going to put my stop loss in, I don't know, pick a point, whatever it is, 110,000. So then let's say it comes up to 110,000. We break the all-time high. Everyone's going, new all-time high. We're going to $130,000, $150,000. And then the market goes, thank you. I'm just grabbing all of your stop losses. That's a liquidity grab. And then I'm going to fake you out and head back down. Could absolutely happen. Okay, so nothing is set in stone. I do like the fact that we're above the 0.786. I do like the fact that we hit the 0.382 here. So it's looking good so far, but you've got to keep your eye out. Okay, that is Bitcoin. Let's take a look at others. Okay, yeah, others still doing its thing. Not a lot to show you. It's just in a range at the moment, and pretty similar from yesterday. Okay, we had that move down to exactly the top end of the zag zone right there. So that's good. Bounced off it, and we just need to clear. I would say clear there at 288 billion, 287 billion, and then that's looking good for a further pump. And there's a bit of convergence. There's a higher low so far there as well. Could this be the time where we've just turned around and this is now the next little leg up? Could be. Not determinate yet. It could be, but watch out for a move down to, this is still possible, okay, where you get a move down to that 250, 245 billion, and that butts up exactly with this major downtrend line. Okay, so breakout, retest, and then onwards and upwards. That would be great, okay? And that's finding support at previous resistance around that level there. That's very detailed, sorry. You've got a lot of lines going on. So short answer is, I don't know yet. Bias probably further to the downside at this moment, but that's why I have a whole bunch of buy orders set on some crypto. I got out of everything. Just so you know, so the stuff I said I was in, I'm now out of. I took a small amount of profit, and I'm just waiting to see what confirms. Okay, so for example, just to show you what I'm was in, but currently not in, but currently have buy orders at. Okay, so I'm currently looking at ENA right here. If this crosses, again, I might have to take my lumps on this. If this crosses back through there at around about 44 cents, I'll have to watch what are the ratio, what are the oscillators doing, relative strength index, on balance volume, but I might have to get back in here. But I've currently got a buy order set. I think it's around here. Yes, it's around here at that 0.618. So I have a buy order set there. I have a buy order set on Gala. Okay, now I'm not going to show you the reasons why, but I've all got buy orders on these crypto in particular because they still have a good, decent way to run before they get to their respective higher zag zones. Okay, so they've got the most potential for good higher percentage moves, best risk to reward. I think I have a buy order set here. I think it is at the 0.5. That's around about 19.19 cents, something like that. I have a buy order on GRT, and I think I've got it set at here, I think it is. And I have a buy order set on TIA. So as you know, I did that video on TIA a couple of days ago. I have a buy order set now. I got out of it slightly in profit, which was nice, because I saw this happening there. That was looking like a bit of a triple toppy thing, bearish divergence, so I got out, made a tiny bit of a profit, and my buy order set is back at, yeah, I've got a couple actually. I think I'm riding them all. I've got it here, here, and here, just in case, because I'm bullish on TIA if crypto continues its run. Why? Because it's one of the ones that has a really good potential for some higher gains. Okay, it's nowhere near its zag zone from its previous all-time high. You've got a bit of trap money to get through here, but you've got a potential 190% move or a 45% move there. I'd be watching out for there, as I said, for some decent resistance. Okay, but that if you break through that $4.50 area, you're probably heading up to there. That's a really good risk to reward. Okay, and I've also got a buy order set on WIF. Now WIF is one where I might again have to take my lumps, and I might have to be buying higher, but on balance of probability, I mean, look at this. Let me get rid of you for a sec. Look at this. You're extremely overvalued on the daily time frame already. Yes, you can tick over and continue onwards and upwards. We could see some higher highs, but on balance of probability, I've got a buy order set, I think, at both the 0.5 level, and I think I have one here at the 0.618. If it comes down to here, it'll grab. If it comes down to here but doesn't grab the 618, at least I've grabbed a buy order at the 0.5. Okay, so that's why I'm hedging my bets and doing it at the two different levels, but I will have dollar cost averaged in if it does that and then clear there. Yeah, man. And then you're onwards and upwards to, I think, the next major level. Let me show you on the monthly. Nope, I'll show you on the weekly. That's the buy bit price. If I got all my indicators here, that's a bit better. Yes, I have. So then from here, you've got your trapped money here, which we, out of interest with WIF, dog with hat. Yes, meme coin, right? Dog with hat came up to basically the trapped money. It has rejected it so far. If it does it, the next time it does it, more likely to be taken out because it's taken a little bit out here. It'll chip away at these trapped buyers right here, trapped money here. They got in here and they went, oh, crap. So I'm going to break even here. Sure, once you get through there, and if you do, and where are we now? Well, it depends. So if, for example, my buy order, which was, and we'll get to your comments, etc. in just a second. If my buy orders get triggered here and here, for example, my average cost would be around about here, and that is a roughly 130% move from where I would be averaged in to the next major Fibonacci levels, the zag zone from the all-time high and the what seems to be a potential all-time low. So that's 130%. So that's why I'm in these cryptos in particular, still watching out for them, not back in, but that's looking potentially positive here on the relative strength index as well. Watch for a tick above. Why did I do it there? I don't know why I did it there. Why did I do that? Oh, because of this level of resistance. So on the relative strength index, you can see we cracked through support. That's confirming that move, okay? But really, there's a big area of resistance here, okay? So that's that level. That's why I had it. If you crack above there, I would say it's looking really good for that move up to that, at least the top end of the 0.382, anywhere up to the top end of the zag zone. So I could actually potentially have a 250% increase. That's not bad. Okay, but you'd be wanting to take pretty good profits here. Okay, that is with. Anything else I want to look at? Toshi. No, I don't want to look at Toshi at the moment. Oh, by the way, no, I do have a buy order set on Toshi, and that is at the 0.618, and I have it at the 0006, right about there. I have a buy order set. I do think we see potentially lower prices from here. That's the bottom end of where I want to see it go below, and then do that, and then we'll talk higher prices. We are not there yet. Cool. Give me 1 second. I'm just going to check something that you can't see. What have we done? Did we come down, and did I get a position? Give me 1 second. Did my position get... Yes, it did. Ooh, I'm going to show you something right now. Where are we? Oh, yeah, I like it. Did I nab a position in there? No, I didn't nab a position. Sorry. No, give me 1 sec. I can't show you this. No, I didn't get a position. Give me 1 second. You can't see what I'm doing. I'm now going to have to take a position there, am I? Or is my order still in? My order's still in. I'll wait a little bit longer. I'm not going to show you that. I'll tell you if I get the order triggered. That is crypto and all that stuff. Comments, final questions, queries, and super chats are always helpful. And do you want to be a better investor? I didn't do this, sorry. Do you want to be a better investor? Join Mastering the Markets, masteringthemarkets.com. Amazing educational courses. The 10-week course will give you the basic foundational principles of Dow theory and technical analysis foundations. You'll learn to be a much better investor than you probably are already. Okay, just learning the basic technical analysis foundations. Okay, if you want to be a full-on trader, think about their 12-month course. Okay, this is headed up by, as you know, ASX Trader. Great YouTube channel, great knowledge, all that. This is his business, his educational business, and of course, paired with the courses that you can do. Of course, all the students hang out in the Mastering the Markets Academy. Now, you can join the Academy for free and check out all their free stuff that they talk about in the free section. But if you want to join the Mastering Markets Academy, just to see what are the students talking about, what are they learning? You don't get to go through the courses, but they talk about what they've learned about. They're putting what they're learning into practice. They're posting their charts. Here's what I'm seeing. ASX Trader posts his private charts here in the private membership. Okay, it's a monthly fee, but you don't have to pay for a course. Okay, now I'm a member of this academy, and I can tell you right now in the paid academy, I'm getting sponsored by Mastering the Markets for that, of course, and I'm learning so much already. As I've told you, all these educational stuff. Look at ASX Trader posts anytime, right? Out of interest. Now, here's something. As you know, I've been talking about the platinum to gold ratio a lot recently, and here's where I absolutely love. I can see when people smarter than me are saying the same thing as I was. Okay, so I'll give you an example. Here I posted, and it's so good to have this backup of, oh yeah, I think what I'm talking about is actually, good, because other people who have been in it for a longer, and better than me, I'm finding convergence, right? Confluence between opinion. To give you an example, I posted here not that long ago, maybe a few days ago, maybe last week. I'm just going to show you ENA. No, it was there. No. Chile. No, here we go. I posted 5 days ago the platinum to gold ratio. I said platinum versus gold just broke the market structure on the daily off of bullish divergence and a higher low. So that's where it was. It just broke through. It was looking really good. Okay, platinum to gold ratio, historically very low on the monthly time frame. And the fiat price is almost breaking out of its $1,000 kind of area. And I said, hey, give me your thoughts. What does everyone think? 5 days later, ASX Trader posts himself talking about the platinum to gold ratio. It's just amazing. So, and it's even crept up higher than there. So it just gives me like, oh man, the smart people are even seeing what I'm seeing. So it gives great confluence. So be a part of the paid membership at Mastering the Markets Academy, and you get the bi-weekly calls from a bunch of the different educators. Okay, we go the educator calls. Let me show you here. You can have a private live session, not you, but a group session with ASX Trader twice a week. Craig Tapping, weekly market scan. You've got Tung's Macro Sundays. You've got another market scan with Frank Watkins. They all bring different things to the table, okay? And you've got Craig Dixon, who is doing fundamental analysis, goes into depth about individual companies, looking at their price to earnings ratios, all that kind of fundamental stuff. You use fundamental analysis to pair with technical analysis to get confluence, okay? This is great stuff. Join the Mastering the Markets Academy, academy.masteringthemarkets.com. I'll put a link to the specific sign-up page in the info section of the YouTube page, and as part of the pinned comment after the show. Had to do the sponsored mention. And you know what? I was mentioning them before I got sponsored by them anyway. So it's just great to now get some sponsorship too. Let's see. Final comments, and we shall get it out of here. Unless I can do a quick chart request, I'll maybe take a chart request. Let's see. Pete repeats. Good to talk. MetaMint. Hello, MetaMint. Okay. GC1 versus SPX ratio. Okay, from MetaMint. First off, welcome to the show, MetaMint. I've never seen you participate live on the show. Are you a first-time watcher as well? I'll take a look at that. And that's now GC1 is oil. That's light crude oil versus the S&P 500. Okay. I might take a quick look at that. Yeah, oil's doing well at the moment. MetaMint. Okay, looks like Space Miner knows MetaMint maybe. Finished with dinner and ready for dessert. Can I get a look-see? Oh, okay, at ATR R-Trade or Neural AI, please and thank you. What is the ticker for Neural AI, please? I need to know what that. Epic takedown equals epic reposition. Epic fakeout equals epic reposition. Fair enough. Wanting to double down on R-Trade. Okay, yes, you've posted it a couple of times, MetaMint. Let me see if I can do that. In the consolidation accumulation phase 1, next will sacrifice to further main projects. Oh, memes. I hold 3 memes. Too many. Toshi and slow-moving ALF token. Don't look at that one. Yeah, I won't look at that one. Dropped $70 on ALF in their launch. Yeah, nah. Let's see. I entered QBTS. D-Wave Quantum. Really enjoy it. Want to check it? Been here for a while. Good, MetaMint. Great to see you on the channel and participating. That is fantastic. All right. Let me see if I can do a couple of things. Doozies, a couple of things for you. So what am I looking at? Oh, I might be. What's that? Oh, that was my other account. Can you follow me on X, by the way, people? Can you do me a favor? Follow me on x.com/it's Joe Main, and please follow me on Facebook. I need to get over 100 followers on my new Facebook page so I can start streaming live there. That's at facebook.com/the Joe Main. Can you follow me both there, please? That would be really helpful. Let's take a look. Okay, so I'm going to have to do, GC1, it never comes up for me. So let's go GC1. I'm going to do crude. No, I've got it here. Give me 1 second. I've got it listed here. Give me a sec. I've got it here. It's down here somewhere. It's not the thing, but it's GC1. What's it called? Oh, gold futures. Okay, so gold futures, the GC1 versus the S&P 500. Oh, it's gold. Sorry. It's GC. It's not... what was it? Yeah, GC1. It's not oil. It's GC1. So it's gold futures. Sorry, nothing to do with oil. Let's see. Gold futures. Gold futures. Sure, I'll just do that one. Okay, versus, this might not work, by the way. No, I knew it wouldn't. Okay, give me a second. GC, I'm going to go in futures. Gold futures. Where's it GC1? Why can't I get GC1? It doesn't allow me. Okay, I don't know. I don't think I can do it. Give me a sec. GC1, that's a stock, that's a fund. Well, it's a future. GC1, no. No, all why when I type in GC1, why doesn't it come up? Because I go GC1 exclamation point and it comes up with that. Okay, sure. Slash. Yeah, okay, let's just give that a go. This might not work. Let's find out. Oh yeah, it does. Okay, cool. Okay, cool. There you go. All right, here is GC1 versus, so this is gold futures versus the S&P 500 on the daily time frame. So it's basically gold. It's gold versus the SPX. Oh, it's gold versus the S&P 500. It's like our bloody thing that we've talked about a million times, but it's gold futures. This goes back to, I see. This goes back to the, all the way up to 1975. Well, this will be, will that be, and I'll keep that actually. Thank you for that. MetaMint, I think your name is. I'm just going to check the gold to SPX ratio. Physical gold to SPX ratio, right? That's the same thing, just in a smaller time frame. Okay, so by the way, gold to XPS ratio has been doing great. We've been talking about gold versus the S&P 500 for a long time. We've been talking about it before it broke out here. Then we started talking about it when it just broke out. It broke out, had the retest of this major downtrend line, and I said once it breaks the 0.5 level right there, it's game on. And I'm still, it's game on. So now what did we see? We saw a massive rise in gold. Now we're just coming back down. So I could kind of use this one versus the futures, okay? The futures just go back a little bit further, but we'll take a look at that too. But yeah, where are we with the gold to SPX ratio? We just take it from here, and here's where we need to hold. So I'll show you on the weekly time frame. This needs to hold here, and I think it probably will. Okay, unless we're going to just spend a bit of time here and then back down, but it needs to hold right into this area here. And don't go lower than here, preferably in this zone right there. So don't go lower than preferably, well, it's back to the 0.5 level, basically. Yeah, 0.515. Stay within this zone. Preferably don't do that, because then you've got a potential of heading back down there. That wouldn't be great. Okay, that would say that we're going more risk on. This is not great for gold holders. Okay, it would say that the S&P 500 is we're going to be more of a risk on environment. Okay, so if you bounce off here, which I probably expect to bounce off here, then you want to do onwards and upwards and then cross through there and then onwards and upwards. That's great for gold. Okay, it would be saying though in the larger macro economy that we're heading down. Okay, so it depends. Do you want to see this continue to go up, or do you actually want to see it to continue to go down? I actually don't care either way, so long as I'm making money and providing for my family and building generational wealth. So I will follow where the data takes me. Okay, so that's that. Let me show you just on the bigger time frame though. So this is the same thing, except going all the way back, and it's the gold futures. Okay, so it kind of tracks the gold price though, pretty much. Although it's the gold futures price. Yeah, found that broke out, and now we're at massive support. Cool. Gold futures versus there. Yeah, we broke back out of the 0.786. That's good, but we're not out of the woods just yet. You couldn't say that we are. Yeah, see, it's interesting when you take a look at the gold to SPX ratio, which only went back to about 1990 something. You go, oh yeah, breaking out today. When you take a look at it versus when it goes back to this historical data, we're still quite low. Okay, and from this low and this high, we didn't even keep support here at the 0.618. Okay, so you need to get back through there, bare minimum. Okay, got to get at least back through there. And if you're doing it in the reverse, then assuming this is the low, all right, we're assuming here, you take it from this high and this low, and yeah, we're not even, and gee, where did we find resistance? Well, that's actually previous resistance, previous support there. Isn't it interesting how it lines up with the 0.236 resistance? So we're not even over there yet. Okay, so on the larger macro, okay, we've got some hurdles to get over for gold versus the stock market, right? You've at least got to get through here. Now, this says though, there is some good potential if you can break here. So basically, I would say if we break where we were before on the gold to SPX ratio, you break there, you're probably at least coming up to test here, but this will be an area of resistance somewhere in that zone right there. So you really want to clear there to say gold just, flying to the absolute moon versus the S&P 500, but that wouldn't be good for the basic. You see that? Not good for the general economy, I'd say. Let me go. Where is I need my price range thing. So that's another. You break there. Oh, that's another 30%. Okay, so you can make another 30% on your gold versus S&P 500. Points of that index. Cool. So that's that. And if I take you to the absolute macro, going back to the 1970s, where are we here? A long way to go. Yeah, long way to go there. I don't expect us to get up into this kind of area anytime soon, but on the macro, that's where, on the really big longer term time frame, right, that's your big boy right there, area of trapped money buying right there. Okay, that's through there. It's through that big area of resistance. So yeah, you'd be watching out for the long term, and we're talking, years and years to come. Okay, but that's a potential, 430%. Again, gold versus the points of the stock market. Okay, there will come a time where this is at a high point, and you will be wanting to swap your precious metals for very undervalued stocks, such as, I would say, Tesla, such as things like that. Anyway, that's that one. Someone said R-Trade. Don't know what it is, so let me look it up. R-Trade. R-Trade. Okay, it's a crypto. Cool. R-Trade. It's on crypto.com. It's on Poloniex. It's probably, and it's on the, it's on MEXC. So these will be the ones that have the most historical data. R-Trade. Don't know what it is. Don't know what it does. Don't care for the moment. Just looking at the, let's see, what's that? That goes back to February. That goes back to, looks like less than there, April. That goes back, oh yeah, here we go. Yeah, of course, crypto.com is going to be the one because it's, yeah. So this goes back to July of 2022. Oh, okay, geez. I'm sure it's been around for a while. Let's see, R-Trade. Cool. Someone's looking at, someone likes R-Trade. Sure. What am I seeing? Don't know what it is. Don't know what it does. Don't care, as I said. From this low and this high, it did not respect the zag zone. We're below it currently still. So you've at least got to get through here to say any kind of semblance of having strength. All right. Get through right there at 5.5 cents. If you can break 5.5 cents, I would say, okay, probably new all-time high coming. And the all-time high is at 10 cents. So if it breaks 5 cents, look for it to double probably pretty quickly to 10 cents. Nothing's telling me it's happening yet. Okay. R-Trade. If you could let me know, gentlemen, in the comments what it is and what it does. Although, a rising tide raises all ships, so it probably doesn't matter if just general crypto is going to go up. This thing is going to go up too. It's not likely to be an outlier, I would say. But from this high and this low, out of interest, yeah, still not found exact resistance at the 0.236. There you go. Okay, so got to get through there. Yeah, and up to that 5.5 cent level, as I said. Clear for and here's some confluence. All right, there you go. There's your 5.5 cent absolute line in the sand. Why? From this high and this low, what have you got? You've got at least the 0.5 Fibonacci. Here's a key Fibonacci at 5.5 cents. And then when you do there and there, you get some confluence at 5.5 cents right there. So that's your big level, I'd say. Clear there, looking good. Don't clear there, not looking good. That's pretty much all I have to say on R-Trade. Cool, and it's ATR is the ticker for anyone wondering. And someone mentioned something else. I need the ticker for it though. Let me go back. Thanks for the insight. You are very welcome. And Gerald, it's a long hold as it's rare. Oh, it's a rare collectible auction site. Okay, cool. R-Trade, rare collectible auction site. Good to know. Long trade for you. Fantastic. Clear that 5.5 cent level, and I'd be considering getting in myself. Yeah, Metamint said, thanks for the insight. You're no problem at all. We're nearly there. I'd say 5 more minutes, people. Neural is the ticker for future references. Neural AI. Thank you very much. We'll take a quick look at Neural AI. Let's go back to the Scran bra. Neural AI. Neural. It's Neuralink. So is this a crypto? Neural AI. So it's a crypto. So Neural is Neuralink, right? Neuralink. Neural AI. Oh God. Okay. So it's all DeFi. Oh, we've got one here. Is it going to show me? Okay. Give me a second. I'm going to look at Dex Screener and I'll look at Neural AI. Can you tell me what Neural AI is about? Just a random crypto. Let me see. Neural AI. Oh, okay. We're talking micro cap. Micro cap, mini. Okay, so it's on Ethereum. Yeah, okay, probably not a lot to say on this one, to be honest, but this is basically one you're giving us a little bit of a heads up on, so I appreciate that. I'll pop it onto log scale. Okay, here is Neural AI on Dex Screener, $4.50 at the moment. Don't know what it is, don't know what it does. It says powering agentic, okay, so AI agents and dynamic virtual wallets. Cool, all right. This is it on the daily. Let's take a look at it on the weekly. The price chart goes all the way back to March of last year. Oh, so it's one of the first to really get into the AI space, and it's lasted too. That's really interesting. Okay, so you can get it on Ethereum. Doesn't look like it's on any exchanges at the moment. So again, the log chart. Okay, so we had a launch at 0005, a high of, yeah, okay, and that's in, yeah, December last year of basically $18. Okay, cool. Where are we from this low and this high? Yeah, okay, because it's such a huge thing. But you can see it does. Look at that, how it lines up really well. There's the 0.786 from, again, this low and this high, and it had some resistance. Now it's broken through. Okay, cool. It's broken through resistance. It's not through its major resistance, but it's broken through a good level. Oh, it's actually pretty major. Major level of support, broke through, became resistance. Actually, if I pop that on the daily, you could call that has changed its market structure. So yeah, let me pop on the RSI and let me pop on the OBV, the OBV. Anything that was signaling that it might have been about to take off. Let's see. Yes, there is. So you've got to stop. Stupid thing. All right, let's go. Yes, you do. Absolute bullish divergence playing out. I don't know about the OBV, but it's playing out on the relative strength index. Yes, it was. Yeah, okay, so you can probably call that. There's your there, and that was flattening out. That's bullish divergence on the RSI. It was not matching it on the OBV, but here, now I have to get, sorry, you got to see my head right there. Yeah, look, that's a lower, is that a lower flattening out at least, or a lower low? And then yeah, slight bullish divergence, you could call it that. Yeah, and then we've seen that move, and then we've broken market structure here. Okay, that's good for Neural AI. Whoever's buzzing me right now, stop buzzing me. So that's good. I would expect to see it come back and test some support. We've had a move up to previous resistance, right bang on there, you can see. Bang, right there. Okay, that goes through there. And now I need to see it come back and test support. Where have we tested? We'll take it from, again, we're on the daily, so I'll take it from, do I do the daily or the weekly? Let's go back to the weekly. I'll do the daily for intraday, for daily support. And we have found exact support so far at the 0.382. That's good. Don't go lower than here at $4. So that's on the sort of smaller term time frame. Don't go lower than, sorry, not you. Don't go lower than $4. We can sweep that and do that, and then we'd be onwards and upwards. Okay, that's good. On the larger time frame, on the weekly, because you've got to take it from the pivot, which is going to be from here to here. And we don't know if that's the pivot though. But if this were the pivot, yeah, you can't say that's the pivot. Pivot, pivot, like Ross and Rachel, like Ross from Friends. Yeah, I don't know if you can say that's the pivot just yet. But if you were coming down, you wouldn't want to go any lower than here at $3.30. Do that? Sure, that's fine. That's fine. Sweep that, and you'd actually give preference for, look at this. Look at this. Look at. Is it, am I reading tea? Is it tea leaf reading here? I don't think so. Okay, so look at this. I'm just showing you the power of this SHIT. Okay, the high, the Fibonacci from that low all the way down there and this high, you've got that 0.786 level right there. Then we topped out right here, which was matching that previous resistance. Then watch this. Watch this. Now again, is this a bit of not tea leaf reading? Is it a bit of confirmation bias? But I find it interesting that from this low and this high, where is that 0.5 level Fibonacci 500 at? You can't even see it. It's merging colors. It's changed color because they're right bang on each other, right? At the $3.70 level, that's at the 0.5. That's at that previous major support. So I would say if we are going to come down further, you're probably not going to find support here. You're probably going to find the support here. That matches up perfectly, okay? Now, I'm not saying that's going to happen. Could you stop doing that? Thank you. So, yeah, anywhere down to there at around about $3.80, you wouldn't want to see it cross there because that's crossing back down below through its market structure change, or its big market structure change, I would say. And, yeah, could be good. Potential higher prices for neural AI. What are we looking at? Let me get rid of... Can I just clear this all in one go? Can I do that? Is that a thing? Remove everything. Remove drawings. Yeah, I'll do that. Remove the drawings. And let's take potential new highs if we get there. What's the level we need to bust through? From that high and that low, we're right at G. I should have put that in first. Okay, power of Fibonacci. We found exact resistance at the 0.236. Again, look at that. Okay, this high and this low, that resistance, right? So you need to get through right here. If you get through there, then great. Okay, watch out for resistance here at the trapped money right there at the 0.5. That's at $9.50. If you crack through $11.30, you're pretty much guaranteed to have new all-time highs. And the next all-time highs for neural AI, which is one I'm going to literally watch right now. Thank you for that. I think that was Gerald. Thanks, Gerald. Love your alpha stuff that you keep providing for us. Then you'd watch out for a potential all-time high somewhere between, I like to favor the 0.26, the 2.618, but you've got here and here. So potential higher high, if we're making all-time highs, they're at 27, and you've got right here at 43. So somewhere in that zone, you'd be wanting to be taking some decent profits there. Okay, could it go higher? Sure. Could it do something like a trend line thing? But that's going through there, right? It's getting close between there and there. Yeah, you're getting up there, right? Yeah, between there and there, you'd be taking some profits, at least some off the table, at least your initial investment, because you're not stupid and you like to earn money. Cool. Not saying it's going to there. It's got to clear at least that level of $11.40. That's neural AI, and now I'm watching it. Thank you for that. Yeah, that's it, Pam. That's it, peoples. Bit of both. Osmium, think Osmium. Neural only. Yes, 10 million supply. Everything is a crypto. Everything is a crypto? What do you mean? GMS, do you have time for... Oh, sorry, you said that. QBTS. Oh, sorry. You did say it. Yeah, I'll be generous. Okay, QBTS. Give me a second. QBTS. Don't forget, people, the super chats are open to help support the show. D-Wave Quantum QBTS. Don't know what it is. Don't know what it does. Don't care looking at the price. All right. Ooh. Oh. Okay. What is it about this thing? D-Wave Quantum faces scrutiny after questioned. Oh, scrutiny. Okay. Its volume on the Nasdaq. Its market cap is 3.25 billion. It's not huge, but geez, look at that. D-Wave Quantum. Don't know what it is. Don't know what it does. Can you tell me what sector it's in? It's going to be in the technology sector. QBTS. Give me 1 second. What is QBTS on NYSE and what sector is it in? Let's ask good old Grocolius, which isn't infallible. Listed on the New York. So Devo develops and delivers quantum computing systems. Of course, right? Software and services focusing on quantum annealing technology. The company operates in the technology sector. Duh! Specifically within the sub-industry of quantum computing. So technology. Let me go. Can I find it here? Is it here? Is it XTO? Give me 1 second. XTJ? XTJ? Communications? Do I have an XTO? Give me 1 sec. XTO. SPX. XTO 100. No, XTO. XT. That's not going to be it. Give me 1 second. I was just seeing if I could. There was a particular. No, that's just the S&P versus the. It's the inverse of the S&P versus the ASX. Okay, never mind. Don't know. But you could use the Nasdaq as the general tech index if you wanted to. Okay, sure. Let's go back to D-Wave. Where has it gone? Okay, let's try that again. QBTS. Did I not add it? I did. Okay, rando. Where is it? What the F and F? What the F and F is going on? QBTS. QBTS. There we go. Let's go back to QBTS. Okay, cool. We are at $11. We were at 40 cents back in 2023. Okay, 2 years ago. This is looking interesting. We are at near all-time highs for it. It's been as high as $12.90. That's on the monthly time frame. Let's pop in the on-balance volume. Okay, so we're near all-time highs, people. Okay, let's pop into the weekly and see if there's anything we can see here. Could this be setting up for potential, divergences and whatnot? We already went into extremely overvalued on the weekly time frame back in December of last year. We've since made another high, and since a higher high, it has not broken. That could be reset though. Okay, I wouldn't say this means, you have a higher high and then that's a bearish divergence. I don't necessarily think that's true. Maybe it's reset itself. It could have. What are you doing, bro? Just get rid of there we go. Back onto the weekly. And let's check on the daily. Okay. Daily. Get away from me. Stupid trading view. I love it and I hate it at the same time. So the OBV and the relative strength index are in confluence at the moment. That's in confluence with the price. Okay, let me go from this low and this high. Dang, man. It has basically respected the 0.618, so it came into, it tested it, but it's been in the zag zone. It's now out of its zag zone. Okay, it's heading into extremely overvalued again on the daily, but it can spend a bunch of time there. And it looks like it could be curling up. Everything, look, on balance of probability, you probably are going to see a bit of a higher high. What it does from there, I don't know. What you would want to see is the following: make a higher high, and then that make a higher high, and don't flatten out. You want to see that. And that could continue. It could be a continuation of the trend. However, bear in mind, you're extremely overvalued already on the daily. On the weekly, though, you are not back in overvalued. On the monthly, it looks like it's ticking around. So great to see it at its previous all-time high. Just got to be just careful from here. Hey, look, the thing could absolutely rocket from here. Completely could. So let's do... Just be wary here on the monthly. Okay, yeah, I'll say that. Okay, that's probably the main thing to be aware of, is be aware on the monthly. So this is where you could have a potential bearish divergence. Okay, so this is where you post a monthly high. Okay, pick the month. Okay, it could be this month, right? You could go, piss off. You could creep higher here, and then you could even go higher on the following month. But if this pivots, it starts ticking over, and then that flattens out here, then you're looking at a higher high and a flattening out or even a lower high, and that's a bearish divergence. So bear in mind that, okay? You could see a little bit higher. The question becomes here, if you're trading it, if you're investing for the long term and you're bullish on quantum computing, sure, you're at near all-time highs, and, this could probably break out and maybe find support. That would be good. Okay. So if you're a long-term investor, sure, you're probably dollar cost averaging on this particular thing. Sure, just do that. Cool. And then if you think quantum computing, big thing, cool, then you might continue to see higher prices onwards and upwards you go. And who knows where the price can go from here? Who knows where the price can go, right? Yeah, who knows? It's quantum computing, right? No one knows where it could go. It could sail to the absolute moon. Thousands of dollars could be. Okay, but just watch out here. If you're trading this to make a bit of cash in weeks and months, I wouldn't say get in here, because you'd be wanting to have gotten in down there on the bullish change of market structure, right? It changed there on the monthly, and look what it did. As soon as it started cracking through there at around about $1 something, this is back in November of last year, then it went hog wild. Very smart people went, oh, we've broken here, and then good news, right? So yeah, I wouldn't trade it, but would I invest in it? Yeah, potentially. That is QBTS D-Wave Quantum. I'm going to keep an eye on it though. Why not? Now we're out of here. Okay, we've been going a little bit too long. Well, can we ever go too long? Triple digits for what? Which one? Highly regarded protocol driven. You're talking about that other one. This little thing will, blah, blah, blah. Come on, say it. Supply is tight. I love how optimistic you are, Gerald. Love it. Last accumulating zone before $10. You're talking about neural AI, of course. You're talking triple digits, you're calling. Cool. My bad, I'm done. Throw me kisses. It's my birthday. No, it's not. Is it your birthday? For those like Joe, it was yesterday. Congratulations. Happy 79th birthday, Gerald Draper. You don't look a day over 78. Next month, we're Gnosis. Okay, he's pretty good. He's getting all these things. July will be sweltering hot. You could be right. Good looking out. Thanks for the warning. You are welcome. Space Miner. Ladies and gentlemen, you have watched Good Morning Stackers. Gets higher every time. As I told you, tomorrow may not have a show. I'll be on the road from this afternoon. I'm heading up to New South Wales. I'll be in Newcastle tomorrow night with the U2 show, Achtung Baby. Yes, I am a Bono and a tribute band. And Jason Ashworth, I'm still trying to get you free tickets because you live up in that area. If you live in the Sydney area, I will be in Sydney on Saturday at the Workers Blacktown with the U2 show, Achtung Baby. Hence, I'll be traveling tonight. I'll get up in the morning, might do a live show tomorrow, not 100% sure, but it potentially is. So you might, you'll see me in a random hotel room, or I might be driving. I might do roaming. Let's see. Not me driving, someone else driving. Grab your tasty beverages, people, and get ready for the synchronized slurp. We do the final one of the day, and then you get to your day. I continue my day. I've got to pack and do all that kind of stuff. And we dance it out too, because you have watched.
Good morning, Stack. Oh yeah, we're feeling fine. Good morning, Stack. It's podcast time.
Grab it.
Grab a tasty beverage.
Let's do that. 3, 2, 1, go.
Now we're on the move.
Great talking to you, people. Love your work. You're all so cool. Stay safe, stay informed, keep stacking whatever you're stacking. That's the tagline. And I'll see you all possibly tomorrow. Bye.